I think it's recording now. Okay. So, okay. So if you look at your email, you'll be inundated with the number of informations you're going to see about stocks, trading, penny stocks, and the likes. Messages always come about what to do. But for you to be able to develop a trading plan, the most important thing for you to do is to find a trading style. That's key to developing a trading plan. And for you to be able to do that, you must understand one, what's my risk appetite? You need to know your risk appetite. There are people who are risk averse. They don't, they, it's okay for them to lose money. Okay. They take a lot of risk. Perhaps they're looking at high returns. Their persons, our risk appetite differ. So when they lose small money, they may get BP, you know. Some others are not like that. They are okay with losses. So you have to first understand your risk appetite. Because Forex is a high leveraged market. You can lose more than you actually invest. So you have to first understand what you're looking at. Okay. So first you need to understand your own risk appetite. Okay. Your risk appetite. Very key. All right. Now there are a number of things we're also going to talk about before you start to set up trade plans. You want to look at the time frame you are going to trade. So everything will boil down into how you need to approach the currencies, your trading style. Now, your time frame, how long are you going to hold position? You need to ask yourself that question. Are you going to look at short-term trade opportunities, day trading, or try to capture more significant shift in currency price over weeks, days, or months, or some perhaps something in between? Okay. So your time frame, very key. You need to ask yourself what time frame am I interested in? Time frame, okay? Am I going to be a day trader or a weekly swing trader? These these questions are very important for you to ask. Or maybe you're going to be a monthly trader, monthly swing trader. And then when you've answered that question, you ask yourself, what currency pair am I trading? The currencies you have to look at. Okay? A lot of persons trade in different manner. Some may decide to trade 1 to 3 currency pair. And that's actually what I advocate personally. Okay, don't mind people who say I can trade everything. It really doesn't make sense to trade everything. It makes more sense if you're a specialist in one currency. So some persons will say, "Oh, I trade everything. I'm good at everything. Anything that is forex or in the chart, I can trade." I remember a guy who have been trading for a very long time, even longer than myself, who said one day that if a human turns to an instrument, he would trade it. Well, those are just very overrated statements. I personally don't believe in all that. All right. But you have to look at the best currency, what you are comfortable with, because you need to focus. All right. You need to focus. And if you're trading, if you're looking at 20 currency pairs, you cannot focus. It's not possible. As humans, our brains are trained to focus, not to multitask. Really, that's the best way to get something out of anything you're doing, you have to be very focused. So if you, for example, are looking at one currency pair, let's say euro dollar, very likely you may be more successful than somebody who trades everything, because you see every move. You're looking at it on 1 minute time frame, 5 minutes time frame, 15 minutes time frame, 4 hours time frame, daily time frame, weekly, monthly. So you have an overview of one currency pair. In one hedge fund I worked, there's a lady I met who trades Euro ZAR, USD ZAR. Okay, that's South African ZAR. That's the only thing she trades. A lady in a hedge fund, and she's good. So that's another thing you need to look at. What currency pair am I going to trade? Am I going to trade currencies or commodities? Okay, commodities like gold, oil, nat gas, okay, silver. Are these the things I'm going to focus on? So you need to ask yourself those questions. What now? When you answer that, then you need to ask, why am I trading them? Because if you're trading, for example, Euro USD, and you're focused on that, you are expected to understand everything about the euro and everything about the Aussie. If you know these two things, you can focus on it technically, and then you can start seeing good reward. But the truth is, it's very difficult to do. Very difficult. Many persons find it very difficult to look at what currency pair. But in reality, this currency is moving in one direction. If Euro USD is moving up, Pound USD will move up, Aussie USD will move up, New Zealand USD will move up. They are correlated. So if you're looking at Euro USD and you take a trade and you lose on Euro USD, and you're looking at, let's say you're looking at five different currencies, in your mind you're thinking you're looking at five different currencies. The truth is you're looking at one. And most times your risk appetite, your money management skill would be flawed. Okay? Euro pairs, USD pairs, JPY pairs are positively correlated. Even CHF pairs. So if you're looking at all these currency pairs and you're buying all of them and you're wrong, for example, and they all crash down, it means you lose on these currency pairs. But if you're focused on one, you just lose one. When you're making money, you enter more positions. We'll talk about that in our advanced classes, how you can uh, leverage on all that information. Okay, so you want to decide if you're going to trade currencies or commodities. You have to be focused on at least 1 to 3 maximum. So you could decide that I'm going to trade Euro USD. Okay, oil and gold. 3 currency pairs. You're not looking at any other thing. Or you could say, I don't want to trade oil. I want to trade maybe an indices, S&P 500. So you're trading Euro USD, you're trading S&P 500, you're trading gold. You actually have a healthy portfolio because all these guys are not correlated at all. So you're doing your analysis individually. Yeah, they are relatively correlated, relatively somehow. But the fact that Euro USD moves up doesn't mean gold is also going to move up, and doesn't mean S&P will move up. Okay, gold may be moving up and S&P is down depending on the market environment at the time. So which means that in your portfolio you have currencies, you have indices, and you have commodities. Okay, you have a healthy portfolio. And that's actually how to look at it if you want to actually become a profitable trader. You could decide, okay, I want to substitute Euro USD because I want more volatility with Pound USD. That's okay. But the important thing is that you're looking at a currency pair. Now you could also say, okay, in time when I do not want to trade S&P 500, maybe this month I don't want to trade S&P 500 or I don't want to trade gold. Which other currency pair would I trade? You could add one. You could say, okay, I want an exotic pair like USD ZAR. Okay, we'll discuss that, why this currency pair is a very, very, very important currency pair in our advanced class, or Euro ZAR, or USD Turkish Lira, or Euro Turkish Lira, or USD Mexican Peso. All right. These ones too can be added to your currency portfolio. You could say, okay, I'll add one of these four to Euro USD. They are not correlated. So maximum, you're having four currency pairs. You have a currency pair, a major currency pair, you have an exotic currency pair, you have indices, and then you have commodities. Very healthy. And the truth is, this thing I'm talking about, I just realized this combination a few months back. When I was doing, I think I was doing, I went for an interview for a hedge fund job. So I was asked to create a portfolio. I had already gotten the job anyway, but I was trying to rearrange my portfolio in the job. In the job, and I came up with. It just came to me, and I decided that I think I'm going to limit the way I trade. I'm not going to look at everything anymore. I'm going to look at it based on portfolio. I'm going to look at it as more as a portfolio manager than just trading anything. Because if you look at your chart, there are about 40 currency pairs, and many of us want to trade everything. That's really not professional. In reality, that's not professional. You have to work yourself out of that problem. It's really a big problem. Many persons don't talk about this, but it's really a big problem. Okay? So if you want to trade currencies, you may start by focusing on one currency, Euro, USD. That's all. Gradually, you move to S&P 500. Gradually, you move to gold. And if you can trade these two well, Euro, USD well, then you can decide to move into gold. But please don't trade gold unless you understand what you're doing, because it's highly volatile. All right? So you have to treat your forex trading like a business. Before the end of this course, I'm going to show you the investment portfolio I did anyway last year. You understand more what I'm talking about today. So you have to treat forex trading like a business, because the market is not consistent. But you have to be consistent with your decision you make. And even with your consistency and your discipline, it can still mess you up. It can still mess you up. So you have to be very focused when you're trading. Trade one currency pair and one, if possible, few accounts. All right, few accounts. Now, another thing that you also need to look into is your trade rationale. Am I going to be a fundamental trader or a technical trader? Okay. Okay. Am I going to be a fundamental trader or a technical trader? If I'm going to be a fundamental trader, I should be a fundamental trader. If I'm going to be a technical trader, I should be a technical trader. Am I going to trade breakout strategies or range? I will not advise anyone to trade range anyway or trend. Okay, so if you want to be a break, you have to understand that. If you want to be a breakout trader, the question now is what strategy am I going to use in trading breakouts? If you want to be a trend trader, what strategy will you use in trading trend? These informations are very key. By finding answers to these questions, you're putting yourself yourself not in harm's way. It becomes easy for you to make healthy decisions. Another thing also you have to ask yourself is, what's my risk appetite? How much am I prepared to risk? And what's my expected return? Like I said earlier, trading is a high leverage market. Forex trading is a high leverage market. You shouldn't use your school fees to trade, especially when you don't know what you're doing. Okay? Don't use, or your house rent. Don't use money you cannot afford to lose. No matter how good you are, don't use money you cannot afford to lose. Because you may wake up morning, you may have a position. Now see the reason. You may have an open position today. It's going to 200 pips. Okay? And something happened in the night while you were sleeping. Maybe there was a bombing or something. Market gap 1,000 pips against you. You have $1,000 in your account. You are up 200 pips. Market gaps 1,000 pips against you. That's your negative 800 pips. What will happen? It means you have only $200 remaining. So if it's the money you've used to plan your life, what happens to you at that point? So that's why we always advise, do not risk money you cannot afford to lose. Okay? Ensure that your risk appetite is minimum. Only trade with the money you can afford to lose. That's very, very important. And do not expect that you have answers to all questions, even after doing exactly what we've just talked about. You need to keep trying to see that I've actually gotten what I wanted or what I want. All what we have discussed today, like your time frame, currency pair selection, trade rationales, and risk appetite, you need to practice them first. Use a demo account, practice them first. Then, when you feel comfortable, you can go live. So after practicing, at the end of the day, you have to zero in on the trading style that you're more comfortable with. And then you can pursue that on a consistent basis. Your own individual circumstance, such as your work, your family, your free time, your finance, and your temperament and discipline, are key factors to consider before choosing a trading style. Okay? So whatever trading style you choose to follow, you would not go far unless you have an established plan. You will not go far unless you have an established plan. The thing is, in trading is you execute a trade, that's the beginning of the trade, and you close the trade. That's the end. Now you have to ask yourself, this trading style I have chosen, can I do what's in between? That is monitor the trade. Because when you execute a trade, that's very simple. In 1 second, less than a second, you pick a trade. The next question is, do I have enough time to monitor this trade? Will my job allow me to monitor the trade? This trade style I have chosen, will my circumstance help me to focus on monitoring the trade? Do I have enough free time to monitor the trade? Will my family responsibilities allow me monitor this trade? Am I someone who easily pants when things begin to go wrong? So it's not just about opening a trade and closing it. Yes, it starts from opening a trade, but you have to monitor the trade, analyze it when the market is moving, and then close it when you feel uh it's no longer convenient for you, or let it run when you think you're making big wins. So trade plans are what keep small bad trades from becoming big bad trades. And that's also what turns small winners into big winners. So it's actually a roadmap that helps you to navigate the market. Even when your adrenaline are up, your emotions are up, when they start pumping. So when you have a good trade plan, no matter what the market throws at you, you'll be able to handle it. It helps you to have a stable emotions. So these are the things you actually have to know before you decide to trade. And that's why this course is a foundation course. Every Saturday is what I usually do with my uh, some guys that we trade together is we analyze the market, talk about what will happen the next week. We did that a lot last year, but toward the end of last year, I think that kind of reduced because I had more responsibilities, so I couldn't keep up with it. Family responsibilities. So, but hopefully, we started again this year. I think we missed only once. So hopefully, on Saturday, we're going to tie that in to the foundation course. Right. So you have to be able to make plans. Trading the currency market is not an easy job. It's not an easy job. It's not an easy job. But you can get ahead. It's simple when you learn the tricks, but it's not easy because the market is 70% emotion and 30% technical and fundamental. So there's a lot of emotions that goes into the market. And that's why many persons trade demo well, but when it comes to live account, they don't trade it so well. Because there are no emotions attached to demo trading, but there are more emotions attached to live trading. So if you are doing well on a demo account with $1,000, put that same $1,000 on your live account, and you see that you may be doing poorly. And that's why I personally don't advise people to do demo for so long unless they can view the demo as live account. Right? Unless you can view the demo as live account. I would prefer you do $100 if you have it as demo. Let it be live. Let your emotions be involved. Gradually, you build a strong emotion. Okay. So that's that about developing a trade plan. At this point, do you have any question you would like to ask? Any questions? Okay, seems like there are no questions. Seems like there are no questions. Okay, so let's proceed to the currency pairs that are usually traded and how these currency pairs are formed. So when you, like I said, like we discussed yesterday, currencies are usually paired against each other. Okay, you have euro, euro. So this currency is actually used by the 21 countries. There are 21 countries in the Eurozone, but I think 18 uses euro. So it is called euro. The first three letters rather, are used. Then this is the United States dollar. So United States. So USD. That is it here. The same thing with the Aussie. Whenever you see it. Now, the first currency pair, this is known as the base currency. That's the first one. And this is not known as a quote currency. Excuse me. Everything that happens is usually related to, okay, there's a question. How can we really deal with emotion? Okay, someone asked a very beautiful question. He asked, his question is, how can one really deal with the emotional part while trading so as to be emotionally stable? Trade plan. Trade plan, guys. Guys, the truth is that even with the best trade plan, you may still be wrong. It's just like a doctor, a brain surgeon who has gone to school for 7 years. Is it 7 or 11? I think it's usually 11. Brain surgeon, neurosurgeon. I think it's about 11 years. When you are out one day, you may make mistake and kill someone. Doesn't mean you don't have knowledge. But you may have 9 successful surgery out of 10. Why? Because you understand, you have a plan. You know how to cut. You know where to touch. You know where not to touch. You know when to do surgery. You know when to give drugs. You know when to allow time pass, wait, and all those stuff. You know what to do at every point in time. So it becomes easy. In Forex, you need a plan, a solid plan. That takes emotion away. You also need to write out, for example, your targets, your quarterly, monthly, quarterly, in fact, weekly, monthly, quarterly, and yearly targets. Let's say, for example, you funded $1,000. Your target is 10% monthly. The question is, how do you meet this 10%? How many trades would you take? That's your target is 10%. But many times people don't even talk about the loss size. How much are you willing to risk to make 10%? Are you willing to risk 5%? Okay. Now, at what point do you exit the market if you're wrong? How many currencies am I going to trade to hit 10%? How many pips am I targeting to meet 10%? Now, 10% is about $100, right? With 100 pips, using 0.1, you can actually meet 10%. With 200 pips, using 0.05, you can actually meet 10%. Now, if you break this into weeks, it means your target is 50 pips per week. For 4 weeks, 0.05. How many currencies would you trade to get 50 pips per week? How many currencies? With one currency, you can get 50 pips per week. If you do that for 4 weeks, you've gotten 200. You've actually met your 10% target for the month. But remember that if your target is 200 pips win, your loss has become 100 pips. So when you lose 100 pips, you've recorded your loss for the month, and you shouldn't be trading again. Now, every week you have to divide that into 4 too. It means you don't have to lose more than 25 pips per week. So if you take a trade and you lose 25 pips, that's $50. Is that 50? Is that 50? 12.5. Right? That means you're done for the week. We'll be exiting in the next 1 minute. Please, if we exit, join back. All right. So you may decide that you don't want to trade 0.05 because you just don't want to lose 12.5 USD like that. And you say, okay, I will trade 0.02. Now let's do the maths. If this market moves 50 pips, 0.02, okay, you've only made 50 pips. You've only made how many dollars? $10. 10 USD. So you need 990 USD to go. What if while the trade is going in your direction, you add 0.02 here, add 0.02 here, add 0.02 here. That means you have 0.06, and all your stops are moved to break even.